Good morning and welcome to Charting the Markets on Wednesday, the 29th of March. Let's begin by having a look at today's economic calendar. And at 3 p.m., we've got US pending home sales out for February and expect these to rise by 2.5% month on month and to decline by 19% year on year. And this is then followed by the US EIA crude oil inventories at 3:30 p.m. for the week ending the 24th of March. Now, earlier today at 7 a.m., we had the German GfK consumer confidence data out, which came in as expected at minus 29.5 for April. And this is compared to a downwardly revised number for March, which came in at minus 30.6. So sentiment seems to be gradually improving. And we've also seen that overnight in Asia, where the contagion on Asian banks with regards to the banking crisis seems to be on the wane, and where Alibaba, the tech giant, announced that it was going to split its company into 6 separate groups, leading to a 15% rise in the Alibaba share price in Hong Kong overnight. And also, this is being interpreted by the financial markets as China's crackdown really on tech stocks coming to an end. So this positive sentiment has also followed through onto the European session. And as we can see on the daily financial bet of the FTSE 100, here we are still trading and have been trading for the last 3 days above the red line, which is the 200-day simple moving average at 7,435. And are now trading also above not just yesterday's high, but also Monday's high. So we have a gradual advance taking us back up again towards the high seen last week at 7,587 on this daily financial bet. This we expect to be taken out. And in that case, we should be heading back up again towards the 7,708 to 7,724 lows seen in mid to late January of this year, which could then act as resistance going forward. But as we can see, the sharp declines we saw at the beginning of the month seem to be replaced by gradual advances. And basically, from a technical perspective, as long as we stay above last week's low at 7,331, to the European markets, and we can see here the DAX 40 contract, or actually the index, it's 22nd of March high at 15,304 on this positive sentiment. And we expect that to be taken out in the next, either today or in the next few days, in which case we could head all the way back up again towards the February and March highs between 15,656 and 15,709. So positive momentum really carrying the DAX 40 further with regards to the upside. But what we need to see from a technical perspective is a daily chart close above this 22nd of March high at 15,304. Only then could we expect further upside to be seen, and perhaps new highs for the year to also be made, and the psychological 16,000 mark to be reached in the coming weeks. This view from a technical perspective remains valid as long as Friday's low at 14,801 underpins on a daily chart closing basis. Now, support above there can be seen along this 2-week uptrend line, which currently comes in around 15,052. And above there, we also have the early March low at 15,144, which may act as potential support going forward. Moving on to the US session, what we can see here is the Nasdaq 100. And as you are probably aware, the Nasdaq has been outperforming its US peers over the last few months and is trading much higher since the beginning of the year than the S&P 500 or the Dow Jones Industrials average, for example, the latter having actually dropped with regards to its year-to-date performance into negative territory a couple of weeks ago. And the Nasdaq, however, the Nasdaq 100 remains very strong as flows out of the banking sector into tech has helped it higher. Now, we did see a minor retracement, 2 consecutive days of lower closes at the beginning of this week. And yesterday we dipped down to 12,517. But we have now, so far in the overnight session, risen above yesterday's high at 12,712, and this being a hammer formation on the daily candlestick chart, and us opening likely hopefully also for the bulls closing above that today on a daily closing basis in the open session would mean that the hammer formation has been confirmed and would indicate that the recent ABC corrective move lower will be followed by another upside to the February and March highs being seen, taking us back up again towards the 12,896 and 12,947 highs on this daily financial bed. So what I'm saying here is that from a technical perspective, as long as we stay above 12,517 on a daily chart closing basis, further upside should be seen with regards to the Nasdaq 100, which could then head up and make a multi-month high at around the 13,000 mark. Now, the US dollar has continued to slide as sentiment improves in the market and as risk-on sentiment is gradually gaining ground again. And we can see the impact this has had on the euro-dollar exchange rate. And here we can see that we are on track to perhaps reach our third consecutive day of higher prices with regards to the euro-dollar, and are now heading back up again towards the March high, the current March high at 109.29, and then perhaps could rise back up again towards the psychological 110 mark, and also the 110.33 high seen on the daily financial bed back in February of this year. Now, as we can see here, we've been supported with regards to euro-dollar by this 2-week uptrend line. And basically, as long as we remain above the last reaction low, and that is to say last Friday's low at 107.13 on a daily chart closing basis, further upside seems to be in store for euro-dollar on the back of that weaker US dollar, as flight to safety flows into the dollar a couple of weeks ago on the back of the banking crisis now turn into flows out of the dollar as sentiment improves and the banking crisis seems to abate. Moving on to the British pound, what we can see here is also further upside with regards to cable, taking the exchange rate briefly today to above last week's high at 123.49. That is then basically a nearly 2-month high, with the highs seen back in December and also in January between 124.46 and 48, representing our upside targets for this currency pair. As you can see, we are evolving in a very strongly upward pointing upward trend, and we are currently trading higher, and it looks as if further upside therefore is in store. And this should remain the case as long as the last reaction low, seen last Friday at 121.91 isn't being fallen through. So basically, as long as we stay above 121.91, further upside seems to be in store for the British pound against the US dollar. Moving on to the British pound versus the Japanese yen, a similar story here. Yes, we did falter somewhat and slid back down again briefly to below the mid-March low at 158 yen and 57 sen, and on Friday last week dumped to 158.27. But since then, the British pound has been rising again and is now approaching the red line here, which is the 200-day simply moving average at 163.16. And above there, we have resistance around the 10th of March high at 164.31, and also where the downtrend line can be seen for this year at around 164.50. This would need to be taken out for us to then head back up again towards the late February high at 166.01. But it looks to me, especially now that we are breaking through a shorter term resistance line at the moment here, that further upside is in store for the British pound versus the Japanese yen, and especially if we can manage today or perhaps tomorrow to have a daily chart close, that is to say a daily New York time daily chart close above the red line here, the 200-day simple moving average at 163.16. If that can be taken out, then further upside is most likely in store. Minor support can be found around the 24th of February low at 161.21, and then, as I mentioned here, around the perhaps 160 mark, but the main low really is the low seen on Friday, 158.27. As long as we remain above that, further upside is in store for the British pound versus the Japanese yen. Now, the oil price has risen for the last few days and has risen this week alone by over 5%, and did so amid a dispute involving Kurdish authorities, which halted around 400,000 barrels a day of exports out of Turkey. And overnight, we also saw in the US yesterday that the API data showed that US crude oil inventories unexpectedly declined by 6.1 million barrels last week, compared to an expected rise of 180,000 barrels. So this has led to the price of Brent crude oil heading higher again. And as we can see here, we are now approaching the February low at $79.04, and also the psychological $80 mark. And we'll have to see whether we can rise above there and then head back up again towards the mid-March high around the $83 area. But as you can see here, the upside is slightly losing upside momentum. So it's possible that we may short-term retest last week's high at $77.14. But there is further good support going down to the December lows at $75.32. And for me, provided we hold around there, it is more likely that we will see further upside in the price of crude oil than downside again, especially since a forecast by the China National Petroleum Corporation just yesterday said that the top crude oil importer, China, is expected to rise its oil imports by 6.2% in 2023 to 540 million tons, and that should underpin the demand for crude oil. Moving forward and having a look at gold now, what I would like to mention here is what I also said on Monday when we did charting the markets then, and that is that with sentiment improving with regards to equity markets, the price of gold is likely to slide further as flows that went into gold now are coming out again and go back perhaps into equities. And for me, further downside is likely if we were to fall through Monday's low at $1,944 per troy ounce, in which case we should be heading back down again towards the middle of last week's low at $1,935 per troy ounce. And failure there would really indicate that a top has been formed, and that could then take us all the way back down again to below the 1,900 mark. But we aren't there yet. As you can see, we just trade sideways and are basically capped between on the one hand, the 2003 to $2009 highs seen over the last few weeks, and as I said, this week's and last week's in the middle of last week's lows between $1,944 and $35 per troy ounce. So we'll have to see which way the price will break out of. But unless the banking crisis flares up again, and in that case more flows into gold were to happen, and we were to take out the $2009 high and head back up towards the all-time high around the $2,070 mark, unless that happens, I expect further positive sentiments to carry equity markets higher, in which case the price of gold is likely to decline over the next few days and weeks. Now, I'd like to finish up on New York cocoa today, because this has risen. The futures contract on cocoa has risen to levels last traded in February of 2020 on the back of tight supplies in top grower Ivory Coast, pushing the price higher. And as you can see here, we've had nearly 9 consecutive days of higher prices, take us to yesterday's high on this daily financial bed at $2,892 per metric ton. But today are starting to come off slightly. And I'm not surprised by this price action, simply because you could see yesterday we had this doji forming, so you have a loss of upside momentum. And also, if I go onto a weekly chart, we can see that the price of cocoa is now trading slightly above previous highs we saw back in 2020 and 2022, and is approaching this key high here, the February 2020 high around $2,933. So we may see the price of cocoa stalling over the next few days, in which case it's quite likely that we'll retest the early March high at $2,855, and then perhaps also the 21st of February high around $2,811, simply as the steep ascent we've seen with regards to the price of cocoa is losing upside momentum. So I've just went here on the 5-minute charts by mistake, but you can see that we have, as soon as the market opened here, come off slightly in the overnight session so far. We have to see what happens with regards to the New York session later on today. But it looks as if the strong upside momentum we've seen over the last few days is coming to an end. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is @AxelR_IG.